Ladies and gentlemen, good day and welcome to Manba Finance Limited Q2 H1 FY26 conference call hosted by Dolat Capital. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now like to hand the conference over to Mr. Manish Shah, Managing Director. Thank you, and over to you, sir.
Yeah, good afternoon all. Thank you for joining Manba Finance Limited's earnings call today to discuss the performance of the second quarter and first half of the financial year 2026. I would also like to thank Dolat Capital for hosting this earnings call. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company and operational highlights, followed by which our CFO will brief you on the financial performance of the second quarter and first half. Manba Finance Limited is an NBFC offering a range of financial solutions, including loans to new two-wheeler, three-wheeler, used car, small business loan, top-up loan, used two-wheeler loans. We are currently operating in over 100 locations across 6 states, precisely Maharashtra, Gujarat, Rajasthan, MP, Chhattisgarh, and UP. Our distribution network includes over 1250 plus dealers. We have secured funding from 3 public sector banks, 10 private sector banks, 25 NBFCs. We have a total team size of 1,726 employees, out of which more than 700 plus employees are part of our sales team. Our internal collection team ensures lowest NPAs in the industry. The company commands one of the fastest turnaround times for loan sanction in the industry, with over 60% of loans sanctioned in 1 minute and 92% of the sanctions within a day. As of September 30, 2025, our asset under management stood at 1,500 crore, reflecting a robust year-on-year growth of 36%. We also achieved a record high disbursement of 398 crore during the first half of FY26 compared to 345 crore in the same period last year. This strong performance was primarily driven by encouraging demand in the two-wheeler segment, further supported by our geographical expansion, dealer network, and the addition of new locations during the quarter. Disbursement growth during the quarter was impacted due to the delay in the announcement of expected GST rate cut. Otherwise, it could have been bigger size of AUM we were expecting. With the rate clarity now in place, management anticipates a huge sales and of two-wheeler that is already we have been witnessed in the month of October until now. The disbursement momentums and expecting strong growth in the upcoming quarters also. We also witnessed a healthy increase in net interest income led by a reduction in cost of borrowings. This improvement was supported by our lenders passing on the RBI's rate cut benefit along with the rating outlook upgrade from stable to positive, which further strengthened our credit profile. On the business development front, we further strengthened our reach by entering into 3 new business correspondence partnerships with BT Finance Private Limited, EV Finserv Private Limited, and Inslab Private Limited. This collaboration will help enhance our distribution capability and deepen customer access across the geographies. From a technology and process perspective, we continue to invest in digital initiatives aimed at improving efficiency and customer experience. During the quarter, we launched instant disbursement via JustPay, implemented straight-through process STP mode for used two-wheeler loans. This is the first time in the industry any of the NBFC has launched. and integrated DigiLocker to enable seamless and paperless loan documentation. Overall, the quarter reflects our continued focus on profitable growth, operational efficiency, and digital transformations, supported by healthy demand trends and strategic partnership. Now I request our CFO, Mr. Jay Mota, to brief you on the financial performance.
Thank you, Manish sir. Let me provide a brief overview of the financial performance for the second quarter and the first half of the financial year 2026. For the second quarter under review, our net interest income stood at 38 crore, reflecting a growth of 9% year-on-year. The profit after tax for the quarter was rupees 11 crore, demonstrating a healthy profitability despite of a competitive operating environment. For the first half of FY26, the company reported net interest income of rupees 68 crore, representing a 21% year-on-year growth, supported by the steady loan growth and improved funding efficiencies. Our net interest margin remained strong at 12.56% for the period. Profit after tax for the first half stood at 21 crore, marking an increase of 26% year-on-year basis, reflecting our focus on the sustainable and profitable expansion. On the funding side, our average cost of borrowing currently stands at 10.67%, benefiting from the improved lender relationship and favorable market conditions. As of 30th September 2025, Stage 1 assets stood at rupees 1,393 crore, accounting for the 92.80% of the total portfolio, reflecting a strong asset quality. Stage 2 assets were rupees 55 crore, that is 3.68% of the gross assets, remaining broadly stable compared to the previous year. Stage 3 assets stood at 53 crore, that is 3.52% of the gross assets, slightly higher than the 3.48% in June 2025. While net Stage 3 assets increased marginally to 2.68% from 2.64%, indicating a minor increase in the delinquency but overall contained credit risk. The credit loss for the quarter remained well under control, below 1%. The quality of our loan book. We have also maintained adequate provisioning of rupees 3 crore, ensuring a healthy coverage ratio and strong balance sheet position. Our capital adequacy remains robust at 26.54%, providing ample cushion for the future business growth and the expansion plans. Overall, company continues to deliver steady financial performance supported by a healthy margin, controlled credit cost, and strong capital position. With this, we can now open the floor for the question and answer session.
Yeah, please go ahead.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all the participants that you may press star and 1 to ask a question. The first question is from the line of Mitchell Shah from DAM Capital. Please go ahead.
Thank you for the opportunity. Sir, I have first question on the this two-wheeler demand scenario. Post-festival, how is the trend in particular in this month? And going forward, how do you see scenario for next 1 to 2 quarters?
Yeah, so October we all know that two-wheeler sale has been jumped by 50%. And still after going for 50%, there are a lot of products and lot of dealers are still shortage of vehicle supply. So that vehicle supply now it is coming up. So November is also going well. And because of the rate cut, the people who were of the supposed to buy in the year or two, they are now making their mind and coming forward to buy the new vehicle. So this 10% effectively a 10 to 12,000 rupees of benefit in a two-wheeler is a huge benefit, and that's the reason the historical performance has been done by two-wheeler industry in the month of October, not only 50% grown from the last year, but this is the highest ever sale recorded by two-wheeler industry, that is 30,61,000 vehicles in just 1 month. So that is completely clearly shows the kind of impact of the GST. And it seems that this will continue for at least for this year only, this quarter as well as next quarter.
Sir, within this, any change of behavior of consumer is observed in terms of more shifting towards the scooter or motorcycle, or like 100 cc, 110 cc versus 150 cc?
Yeah. So, of course, there is not much change, but the vehicle which is of 150 to 200 cc, the change has come of almost 18 to 20,000 rupees. So those who were primarily going for 110 cc, they transferred to 125 cc. The 125 cc guys going for unicorn of 150 cc. So that is what we are seeing, that slight change because now they were ready for this money. So now in that, instead of Fang, now they are going to get unicorn. This is an example. So there is a slight change. But of course, scooters are always doing better, especially Activa, Jupiter, and Suzuki Access.
So, and lastly, on the guidance, earlier we were very ambitious and we guided for 100 crore type of annual profit in 2 or 3 years. So, what would be the guidance after this post-GST scenario and the way industry dynamics have changed in terms of the more demand scenario? So where are we on that for FY27, FY28 point of view?
So as per what we planned, we are exactly going on. Of course, more number I cannot disclose, but I can just say that whatever 30% CAGR growth, 30 to 35% what we are reflecting in the previous last 2 to 3 years, that is going to remain same in the next coming year also. Because this year PAT is also been going to be very good, because this is only up to September result. Our main business has happened in the month of October. That is, we have record disbursement of 175.440 crore in the only 1 month of October. That is ever highest by Manba Finance Limited.
Okay, sir. Thanks and all the best.
Yeah, thank you.
Thank you. The next question is from the line of Sudarshan from Prosperity Wealth Management. Please go ahead.
Yeah. Hello, sir. Thank you for the opportunity. The first question is sort of a bookkeeping one. So sequentially, our interest income has gone up 14% from 63 CR to 72 CR. However, the AUM growth is only 6%. So could you please explain more on to it? What is the reason behind it?
AUM growth is how much, you say?
Sequentially 6%.
Quarter to quarter, we are talking about 1,400 crore to 1,500 crore.
Yeah, that's 6%.
Right.
And the interest income works out to be 14% growth sequentially.
Yeah, because there, it is a fine incremental AUM we are talking about 6%. There is a huge disbursements are happening, and in the two-wheeler, the average loan tenure is only 24 months. So it run down also fast. So in the quarter, disbursements are pretty high, and we also get a substantial earning on the processing fees and all also. So that is all. This is a trend year on year, quarter on quarter.
Right. Yeah. And sequentially, borrowings too has gone up actually from 1,098 crore to 1,467. So,
Yeah.
are we
So
carrying excess liquidity, or is it because of change in book mix from
no,
off book to on book?
basically we were expecting a huge, demand for the festivals, the way we always, have continuously historically from last 5 years. So we were keeping almost liquidity of 400 crore rupees, and the most of the sanction and disbursement has come after the 15th of September, that is amounting to 290 crore rupees. So, and this has really given a great opportunity to do the business in the month of October, which we have disbursed the highest loan of 175 crore rupees.
Okay. And just if I'm asking a question, I'm not sure. What would be the guidance for the closing AUM this year?
Yeah. So as already I discussed in the first quarter earning also, we were expecting anything between 1,700 to 1,750 crore rupees AUM by the end of this financial year.
Oh. And so incremental disbursement during this Diwali, what was the yield charged? Because we were trying to bring the LTV down and the yields were also relatively lower comparing to your existing book.
So yield almost similar, but there are a couple of, schemes which we have launched for low LTV. That is the only some of the business which we have done at a yield of 20. Otherwise, our average yield is 21.5.
Okay, sir. Thank you. And how is the traction for used car financing? What is the
Used financing, it's going little slow. I will say slower than what we were expecting, because the area we have started only very, very few areas. Secondly, we were expecting to get a IRR of 17 to 18, where, we are not getting the right kind of profile customers. So now we are changing the strategies, and now we are going on for used car with the co-lending model. So now we will be able to offer to customer at a 15.5, 16 IRR, where we will be getting the right kind of profile and the volume also.
Right. And the co-lending, is it with the Muthoot Capital or is it
No, we are just exploring the possibility with 2-3 lenders.
Right. Okay. And in the previous call, you mentioned you'll be ramping up your small business loan portfolio. So if you can give us an update, like what is the size and what is the current update on it?
Yeah. So that is going on very well. And month on month, our disbursement numbers are also, increasing. Our AUM, which was stood at 48 crore on the quarter one today, and it is gone almost 70 crore rupees. And we have expanded the operational areas also. Initially, it was only at Thane and Mumbai. We have a branch. Then we started Nasik, Pune. We also started at Ahmedabad. We are going to now start from the next financial year at Jaipur. So that is going on very well, and we are getting the right kind of people also for the same product, and it has been exactly growing the way we have been estimated.
And so this small business loans, what is the collateral for it? Is it a self-occupancy property or?
Yeah. So far, whatever business we have done, it is an unsecured loan. Okay. And now the tech part is going on, and we are setting up a processes also. So very soon, latest by January, we'll start the MSME lab. So that will be completely a secured loan. So this is whatever we have disbursed, around 70-75 crore rupees of disbursement has happened. That is an unsecured loan.
Right. And let's say once the secured product comes into stream, will we be concentrating more on the secured portfolio, or will it be a blend? So what will be the result then? How much quantum will be unsecured? How much would be secured portion?
So it will be a blended, unsecured will completely keep on growing the way it is growing now, but the additional growth will come from the MSME lab. So, blended yield will be around 20-21 because unsecured we are lending at 24-26, and the secured we are going to lend at 18-19. So, in all it will be 21 yield, and the gradually secured and unsecured both will grow.
Okay. And what is the current ticket size of the existing portfolio?
So, 2.5 lakhs to maximum 10 lakh rupees. Average ticket is of 4.5 lakhs.
And is there any end-use monitoring framework in place?
Is that any?
End-use monitoring. The purpose of the business loan will be monitored throughout the cycle, right?
Not we are exactly monitoring, but yes, we know that, what is the stock, for what reason they are taking this. Is it for expansion? Is it for a working capital? It should not be for repayment of any other loan. Those all things we are closely monitoring.
Right. And is it safe to say the current portfolio will mostly be working capital loan, or is it any other nature loan?
No, it's a working capital only.
Right. And what would be the portfolio size for the unsecured book, let's say by year end or year two?
So it will be, the AUM will be stand at around 85 to 90 crore max, because we have a board, approval of not to go more than 7% of the total AUM.
Okay. So, and are we targeting any new geographies, or I think our recent entry being Uttar Pradesh, are we going to penetrate more into it, or are we in a stabilization phase wherein we'll be concentrating more on the existing geographies rather than going into new ones?
We are not starting any new state in this financial year, but we are deepening the state which has been recently started in last 2 years, such as UP, MP, and Chhattisgarh. And more, we are very, very focused on UP. So far, the disbursement traction, the performance, the NPA, everything is, behaving very nicely in the UP. This is almost a 18 months journey so far. And that's the result, you must have seen our presentation that we have added 12 new locations in the UP. And there are another 10 locations in pipeline that may start this quarter or maybe in the next quarter.
Right.
As far as products are concerned, we are going to focus on existing product, but at the same time we are adding one new product, that is MSME lab.
Okay. So this MSME lab, how would be the competition profile? Sorry?
Sorry to interrupt. Should you have any follow-up questions, kindly rejoin the queue. Thank you.
Yeah.
Thank you. The next question is from the line of Rupesh from Nayan Securities Private Limited. Please go ahead.
Hi, sir. Am I audible?
Yeah.
Hi, sir. Congratulations on a great set of numbers. I just had a few questions. I firstly wanted to know what is the average rural and urban mix of your AUM?
Yeah. So it is presently around 65 to 35.
65 being the rural area and 35 being the urban area, right?
Yeah.
Okay. And what sort of recoveries do we look at for the NPAs that we face?
What kind of?
What is the recovery percentage of the NPAs that we face?
Recovery, that is final, our credit loss comes to almost 1%, less than 1%. So you can understand that in spite of 3.5% NPA, our final loss is not even 1% also.
All right, sir. And just to add a follow-up sort of on the previous participant's question, like, are you what sort of an expansion are you expecting in UP? Like, how will the mix expand over there?
In the UP, right?
Yes.
So first of all, because the company's core product is two-wheeler, so we want to establish and we want to stabilize first of all, ourselves in the two-wheeler product only. So from last 18 months, we are only into two-wheeler product in UP, and this will be the goal for the next 6 months also. So far, on a east side only, some of the areas only, Lucknow, Sitapur, but those areas we were there. Now we are starting Varanasi belt also we are starting, and there will be another 10 to 15 locations we are going to start in these 2 quarters.
Okay, sir. And just one last confirmation I wanted. So, is our product mix still in the favor of two-wheeler finance, like two-wheeler financing being about 80 to 85% of the book, or has that changed?
No, it is around same only, 80 to 80, presently it is 82%.
All right. All right. Thank you so much, sir. I'll join back with you.
Yeah.
Thank you. A reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Divya from Tickle. Please go ahead.
Hello.
Yeah.
Yeah, congratulations, sir, on the good set of numbers. So I just wanted to ask, so basically, how is the mix between the new and the used vehicle loans evolving? So, I mean, do you expect any shift in the this mix going forward?
Yeah. So, so far, of course, our used two-wheeler portfolio was very small, but what we are in, it is only 1% only. But what we are, seeing from last 3-4 months, and especially from after the rate cuts, lot of people, who are selling their bikes and going for the new bikes. So it seems that will be a huge opportunity in the used two-wheeler also. And we have also been, kept a new vertical, separate vertical for the used two-wheeler, and very, very active. And that's the reason we have launched this quarter only. It is there in the presentation that straight through process we have launched in the used two-wheeler also, which has been first time launched by any NBFC in the country. And there is a good yield also, and whatever loan so far we have disbursed around 20 crore rupees, that is behaving almost in a similar fashion the way it is behaving in the new two-wheeler. Although the rates yield at new wheeler is 21.5 as well as the used two-wheeler is 26.
All right, sir. Also, I just wanted to ask, I mean, can you just elaborate on the new partnerships that we have with, BT Finance and other companies? So, I mean, how would that contribute to our growth?
Yeah. So, last quarter also we added 3 partners. This quarter also we added 3 partners. So that is basically the geography where we are not very keen to enter. For example, we also started at Karnataka, one of the partner. So, these are the players who are doing business from almost 5 to 10 years in the same area of operations. And this is in a way, you are expanding your arms, you are, adding few more dealers, not directly. So this will be straight away, there is no OpEx, there is hardly credit cost. So this can really help us in increasing AUM as well as the profitability also. So that's the reason, company is focusing and appointing such players who have expertise in their own area of operations, and where we don't want to enter directly, we are, supporting them, and in an indirect way, we are increasing our AUM.
So actually, so going forward, are we expecting that we are planning to have new partnership as a part of, our growth story? So are we looking forward to more partnerships going forward?
Yes. We will gradually keep on adding, especially where if some of the products are good, but we don't have the right kind of team for that product in that particular location. So we'll be preferred to join hand with the partner and not to miss the opportunity.
Okay, all right. Thank you so much.
Thank you. The next question is from the line of Amal Vishwakarma from Phillip Capital. Please go ahead.
Hello. Hi, sir. I've just got a couple of questions. So could you just help me with the write-off policy that you guys have for the gross stage 3 assets?
So there is whenever any loan goes into NPA and it crosses 180 days, okay? So there is a particular team working for the same loans. They will, once we will find out that this customer is already shifted, or there are a very rare chance of getting back this vehicle or money. So we put that into the and we do the write-off.
Okay. And so secondly, on your co-lending part, so do we do any sort of co-lending or direct assignments as of now on whatever books we have?
So this year we have not done any co-lending business, no, neither direct assignment. Last year we were doing with Muthoot Capital, and that is running down. Yeah, last year the exposure of 125 crore. Today it has come down to almost 75 crore.
Okay, got it. That clarifies. Thank you, sir.
Thank you. The next question is from the line of Sampath Raj Lalan, an individual investor. Please go ahead.
Good evening, sir. As you explained about your BC partner plan, actually I wanted to understand how is the performance so far of BC business?
Yeah, so journey is not so big. We have just started 6 months back, but what we observed that they are completely doing on our credit terms also, as well as the collection also is going on very well. And so far on the disbursement has happened around 25 crore rupees. So that is performing very well. That's the reason we are adding a few more. Every quarter we want to add 3 to 4 partners, but eventually every partner will have a capping of a monthly disbursement. We don't want to give a large number of bigger exposure to any single partner.
Okay, great.
Thank you. The next question is from the line of Sudarshan from Prosperity Wealth Management. Please go ahead.
Yes, hi. If you can give a number on the NTC customers in the current disbursement.
Yeah, it is in the same 35 to 40%. There will be one change we are observing is that in the urban area like Mumbai, Ahmedabad, Vadodara, Jaipur, Pune, Nagpur, this ratio is every month on month reducing. It is when almost now 26-27%. But at the same time, Chhattisgarh, Ajmer, some of the area like Mehsana, Patan, Palanpur, that is remains almost nearly same or around 40. So average is coming to around 35 to 36%.
Okay. And the repayment behavior between your NTC and credit history customer, is it the same or does it have a different number?
It is more or less same only. As two-wheeler repayment always, as I told in my all past call also, the more the customer equity is there, better is the performance.
Okay. And what would be the GNPA numbers if you can give out on the small business loan portfolio?
It is around 2.75.
Okay. So is it on a lower side because your denominator?
But at the same time, the journey is only 2 years, no? So because here the average ticket size is around 30 months, and this is being the first cycle we are observing. So it is early to say, but of course 2.75 is the best going in the industry.
And in terms of direct assignment, is there any conversation with the banks to do placements, or is it any particular reason why we are not doing it?
So far we have not done in this year, okay. But that can be possibility we do also. But presently there is no talks going on.
Okay. And in terms of pass-through certificates, does all the two-wheeler loans qualify for it, or is there any particular end-use monitoring required for PTC eligibility?
Can you just repeat your question?
The pass-through certificates which we give to banks.
Pass-through certificate.
Yeah.
Huh?
So, is there any requirement that the two-wheeler loan end-use
There is
be
no.
monitored?
No. No.
That's it from my end.
Thank you. A reminder to all the participants that you may press star and one to ask a question. A reminder to all the participants that you may press star and one to ask a question. The next question is from the line of Shreya, an individual investor. Please go ahead.
Hello, good evening. So we observed without disbursements and definitely a strong revenue growth, but profitability has not kept pace. What are the drivers that are actually causing this disconnect, and how do you plan to actually restore the profitability in the coming quarters?
No, the voice is not audible properly. The profitability, right?
Hello.
Can you just repeat your question?
Am I audible now? Is that
Yeah.
better?
Good.
Yeah. So we've seen definitely record disbursements and a very strong revenue growth, but our profitability has not kept pace. So what's driving this disconnect, and how do we plan to restore the profitability in the coming quarters?
Yeah. So profitability is, major of the disbursement are only happening in the third quarter only. So, and as I already told you that we are sitting on the 400 crore rupees of liquidity. So that, negative carry interest was more in the month of September. But from October, this is all used for the new business, new disbursement. And definitely, of course, the PAT is better only, but still from the quarter 3 and quarter 4, it seems it is going to be much better than what we have performed in the first half.
Okay. Also, one question was, so our capital adequacy is falling down to about 26%. And how do we plan to actually manage this and also manage the funding costs going forward?
Yeah, so capital adequacy is around 26%, which is like more than required level of the RBI. So we are right now at the healthy capital adequacy ratio only. What was your
Cost of borrowing.
as far as the cost of borrowing concerned, we have reduced our cost of borrowing by around 100 basis point compared to the borrowing we have done in the month of March. That is mainly it helped because of the RBI rate cut as well as the lenders relationship. So, and further we will be able to reduce the rate of interest, and we are targeting it will come down by another 25 to 50 basis point down in the coming quarter.
Correct, which should also improve our bottom line performance.
Yes.
Yeah.
Okay. Thank you.
Thank you. As there are no ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Manish Shah for closing comments.
Yeah. Thank you all for participating in this earnings call. I hope we have been able to answer your questions satisfactorily. If you have any further questions or would like to know more about the company, please reach out to our IR manager, Valorum Advisors. And we thank Dolat Capital for organizing this call. Thank you very much.
Thank you. On behalf of Manba Finance Limited and Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your line.